So thank you. Very good afternoon to one and all. Respected learned speaker of today's program, Varanasi ji, moderator CA Amit Tiwari ji, and of course other learned professionals who are going to deliberate on very important topic, that is the discussion on the judicial announcement on Sai Wardha power generation. CA Badri ji, Ojas ji, and of course Lokesh ji, and respected participants, good afternoon to all. Friends, indeed it's a great pleasure and privilege to me to welcome you all in today's program, which has been organized by Committee on Insolvency and Bankruptcy Code. We all know that every 15 days, fortnightly, we have one program which is basically on the concurrent topic on some issues related to the insolvency code. And we are fortunate enough that some of the very respected dignitaries have joined their hands today with the committee to deliberate on very important judicial announcements which has taken place very recently, Sai Wardha power generation, which resolution has taken place under IBC. Friends, we all know that the law of insolvency is evolving in the country, and each and every judgment, each and every decision is very much material, because the layers of the law and their uh, real impact on the practical issues, when analyzed by the court of the law, really becomes very important for all of us. So like that, today we are going to have very wonderful discussion in this regard from the learned team of the speakers. And friends, we all know that committee is a very young committee. Yesterday itself, actually, our Vice Chairman, CA Rajendra Kumar ji sir had joined us. So I have just, tried to cover him also. So friends, yesterday itself, we had the committee meeting, first full house committee meeting, lot of suggestions of the members came. And I'm really happy to note the way the professionals in the insolvency profession are trying to contribute to the CIBC is really tremendous. Friends, I'm really thankful to each and everyone for extending your cooperation throughout, the starting of the session. And I'm sure that that this year will be one of the, best year for the insolvency industry as well as insolvency profession under the complete working of the insolvency committee. I'm thankful to Madam Yes Rita, whose efforts is tremendous and commendable, who works day and night to see how the law could be established and how we could deliver our best to the professionals at large. By these words, I conclude my opening remark, and I request my elder brother, C. Rajendra Kumar, PG, Honorable Vice Chairman, who is though denying that he will not speak, still I'll request him to speak at least 2 lines. So over to Rajendra Bhai.
Thank you, Chairman Gyanchan Misra ji. In fact, when the leader has spoken, I don't think we have much to say, because he leads from the front, and the manner in which the programs are being conducted, and the creating an awareness, hand-holding, as well as disseminating information, that is being the forte of our chairman. And I'm glad that we are into it. In fact, the insolvency committee per se, if you see, in the current year, under the chairmanship of Gyanchan Misra ji, who himself is an insolvency professional who handles assignments, it is in safe hands, and people like me who are new to this committee will certainly learn from all the activities. Our secretariat is also very robust and very able, and we have people like Badri and others who are there will certainly help us in ensuring that the objectives are achieved. It's a young committee, it's a the law is very young, and the law, when it is young, it requires more handholding because it's like a small child, running here and there. It requires control. It requires sometimes you need to employ a carrot and stick approach also, and that's what we are doing in this committee to ensure that our objectives, along with the regulators, are being achieved in due course. So thank you very much. And friends, over to the speaker and also the office to continue further proceedings. Chairman, sir.
Thank you, Vice Chairman, sir. Now I'll request the office to kindly start the today's program. Thank you, one and all.
Thank you, Chairman, sir. Thank you, Vice Chairman, sir, for your address. Under your guidance and support, we are organizing this kind of programs for the benefit of members. Thanks indeed to both of you, sir. So,
Madam Rita, before the program starts, I'll request all the participants and viewers that if someone is interested to speak on any topic, they may kindly write to the committee, because well said by Vice Chairman, sir, this is new law. So contribution of each one is needed. And probably the time is that we all have to come together to contribute in such a manner so that the regulatory authorities, they also understand the importance of the committee, how the ICI is working, and its overall aura should be given to the government at large. So we'll request each and everyone to kindly write to the committee, to be moderator, to be speaker, or to be any kind of resource person, whatever you can contribute to the committee. So thank you. Over to Rita, madam.
Yeah, thank you so much, sir. So as sir said, members, you may kindly write to us in this regard at our committee email ID, cibc@icai.in. That is the email ID where you may write to us. So before requesting Amit Tiwari ji, I would take this opportunity to introduce our speaker and moderator. Let me first introduce the speaker for the session today, who would be taking us through this case study presentation of Sai Wardha. He is a resolution professional of the case. Shri Varanasi Venkatachalam, sir. Welcome to you, sir. He is an insolvency professional and company secretary with over 3 decades of experience in legal, secretarial, finance, costing departments with wide clientage, including large and listed entities. He's also a member of the Institute of Cost and Works Accountants of India. He has also successfully resolved one more case, another under IBC, United Seamless Tubular Limited, which he had presented in one of our case study series earlier. Welcome to you, sir. Now, I'd like to introduce the moderator of the session today, CA Dr. Amit Tiwari ji. Amit Tiwari ji is a fellow chartered accountant with over 16 years of experience in the field of finance, taxation, and consultancy. He has a working experience and knowledge in the area of project controlling, project accounting, project taxation, international taxation, business process automation and process re-engineering, mergers and acquisition, procurement and bid management, arbitration and reconciliation. Welcome to you, sir. Now, I would request you, Amit Tiwari ji, to have your initial remarks before you, then you may hand over the session to Venkatachalam, sir, for the case study presentation. Over to you, Amit, sir.
Thank you, Rita ma'am, for giving this opportunity. Honorable CA Gyanchand Mishra, sir, Chairman of IBC Committee of ICAI and Central Council Member, Vice Chairman CA P. Rajan Kumar, sir, today learned speaker IP Venkatachalam, sir, and his team, Miss S. Rita ma'am, Secretary CIBC ICAI, and viewers, very good afternoon. I congratulate ICAI for organizing this webinar on case study of Sai Wardha Power Generation Resolution under IBC. Viewers, this was one of the first resolution of a coal-based thermal power plant under IBC. So we will hear from learned speaker and his team about the case, challenges they faced during the process, and their suggestions. I hand over the mic to Venkat sir and his team. I request him for session. Venkat.
Thank you, Mr. Tiwari. Thank you, Rita ji, and for the motivating words of the chairman and the vice chairman. Good evening and a very warm welcome to all the participants. At the outset, I would like to express my sincere gratitude to the Institute of Chartered Accountants of India and the Committee on IBC for having us here and giving us this opportunity to share our learnings and experiences of the resolution of Sai Wardha Power Generation Limited. As Rita ji has pointed out, this is our second presentation. The same team who have helped me in resolving a very important assignment of United Seamless Tubular Private Limited is also associated here. And that's a virtual CPA meeting was has given us an opportunity to make a presentation on 24th August of 2021. Now, the case study series of the committee is one of its kind, and all the case study session till date have been very insightful and informative, and has given members a look inside CIRP of diverse industries like real estate, steel, power plant, pharma, to name a few. It is a delight to watch fellow insolvency professionals who've been part of landmark CRP resolutions. Now, power sector, as we all know, has been reeling under stress for various reasons, including but not limited to huge outstanding dues from discoms, coal shortages, regulatory environment, to name a few. Considering this, I am happy to share that Sai Wardha Power Generation Limited resolution was one of the first resolution of coal-based thermal power plant in the country under IBC framework, and that the resolution plan was successfully implemented, and the power plant is currently operating as a going concern. Today, I am joined by my team, as already introduced by the chairman, Mr. Lokesh Vasudevan, Ojas Modi, and Srinivasan Badri Narayanan, all perspicacious chartered accountants, and who have been assisting me in multiple CRP processes since 2017. In fact, at the time when this corporate debtor was admitted into CRP, the assignment which we have presented earlier was like United Seamless Tubular Private Limited was reaching its finality. In January 2021, the resolution was approved. So we can understand and everybody can be aware as to what stress we must have gone through handling two important assignments. IBC was introduced, as we all know, with effect from 1st December 2016. And Sai Wardha Power Generation was admitted into IBC in November 2018, within a span of 1 year. So when Sai Wardha was admitted, IBC framework was still in its nascent stage, and we were still staring at multiple amendments and judicial interpreters as the law is being evolved. So the presentation protocol for the day shall be shared by all my team members in equal measure, covering all aspects of the resolution. Now, I'll hand over the forum to Badri Narayanan to give a brief regarding the power sector and provide update about the corporate debtor and initial activities undertaken in CIRP of the corporate debtor. Over to you, Mr. Badri.
Thank you, Venkatachan sir. Very good afternoon to all the participants. First of all, we like to thank IBC committee of ICAI to give us this wonderful opportunity to share our experience and learnings in the resolution of Sai Wardha Power. So just to give a quick brief about the power sector, we all know that the power sector has been really under a lot of stress. That is because of regulatory concerns as well as lack of PPAs, fuel costs, fuel commitments, lack of even though there are fuel supply agreements, but there is lack of fuel supply. And because of all those things, the power sector in general has been ineffective, inefficient, and been facing losses. So a robust power sector is like one of the most fundamental underpinnings for a modern socio-economic development, right? And a lot of reforms were done by the government since 1990s when we opened up for our global economy. A lot of reforms were brought in to galvanize private sector investment into power sector. One of the measures was Electricity Act 2003, which understood the concerns being faced by the sector and wanted to address many of the issues being faced by the sector. Now, a lot of different aspects were involved, where the dilemma is private sector has to work along with your state government, or there is a public utility along with the private sector has to collaborate and work along with, which creates a lot of repercussions and a lot of you might say red tapeism, and a lot of inefficiencies also creep in. The power offtake and the revenue generation is normally the risk of offtake and the revenue generation is based on a single buyer, which is your state-run monopolies. That again creates a lot of friction and a lot of inefficiencies get built in. So as we all know, power is a very highly regulated sector, a very complex sector. And I think the participants might remember that recently in Andhra Pradesh, there was a measure taken by the government to arbitrarily reduce the PPA tariff, already agreed PPA tariff on wind and your solar power PPAs, right? Which was fortunately struck down by the High Court, the Honorable High Court there. But these are the kinds of intervention we see in power sector, which makes it very complex, which makes it very complicated. Now, there are three major concerns which one sees in the power sector. The first concern is lack of payment or timely payment by the DISCOM. Around, even as we speak on today, there's a portal called Prapti portal, and that maps the outstanding dues by DISCOMs to power generator. More than 90,000 crores is even pending as on date. There is a lot of recovery because of a lot of measures taken by the government, a lot of improvement is there, but still a lot of money is yet to be paid by DISCOMs to the power generator. That creates a stress. Now, DISCOMs might say that, third parties have not paid to them, so they have not been able to pay the power generator. But there might be some legal issues, pending appeals, and those appeals are not getting cleared. Because of all these things, the dues gets accumulated, and then that creates more pressure on the power generators. The second point is the fuel supply. Even though there is an assurance of 100% fuel supply, the power generators are not getting that. So there was a coal policy in 2007, which said, 100% coal requirement will be met out, which was then redefined through a Shakti scheme in 2017, where it was brought down to 75%. But even then, the fuel supply was not assured to the power generator because of a lot of reasons. Again, that also created an operational viability gap. Right, there was a Supreme Court judgment which says that if you assure fuel supply and you're not able to provide that, that is a change in law, right? And if there is a change in law, an agreement can be modified and there can be compensation to the power generators on account of that change in law. But to get that compensation, we have to again go through a lot of regulatory approvals, a lot of bureaucracy, and it takes so much of time that till that compensation comes, the power generator have to bear all that additional cost, and whatever interest comes on the compensation is very insignificant and very low. So these are the two reasons. And the third reason is, as I said, it's a very highly regulated complex area. Any taxes, any duties that get inbuilt by the government, whether that can be passed on to the consumers or not, what tariff can be charged. So everything, it goes through regulatory commissions here. You have, each state has a regulatory commission, and every such aspect of a PPA or anything on the fuel supply, everything goes through a regulatory commission here. That again, a lot of inefficiencies. We also see that there is a ultimate question, should you see power as a commodity, like just any other commodity which can be bought and sold, or should you see it as an essential public supply of service, which should be provided to public at a minimum cost? When these two questions clashes, you get a lot of complications. So whether power is a commodity or is an essential supply, because of these concerns, the DISCOMs are also facing a lot of losses because they have to build a balance between these two questions. Now, we'll just go through. IBC came out around December 2016, right? And if you remember, June 2017, RBI came out with a list of 12 large NPAs, which were to be driven into insolvency and bankruptcy code. Now, these 12 large defaulters made up for almost 25% of gross NPA at that point of time. And one of the largest defaulter in that was Bhushan Power. So one of the power sector component also got into that 12 large list. RBI came out with a circular in 12th February 2018. This was probably one of the toughest measure on the NPA crisis by RBI, where they said that if there is an outstanding exposure of more than 2,000 crores, right? And on the date of that reference, 12th February 2018, in case just I'm so sorry. So the RBI circular said if there is an outstanding debt exposure of more than 2,000 crores, and if within 180 days of 12 February 2018, there is no resolution on this, then they have to be put into IBC. So this was like an en masse referral of all the companies, more than 2,000 crores outstanding exposure to be pushed into IBC. This circular also repealed all the existing frameworks like your statutory debt restructuring, your S4E scheme. So everything was, repealed, and you had one framework, one 12 February circular, and which triggered everything into IBC. Now this had lot of opposition. I mean, you had association of power producers, you had independent power associations, which all went against the circular. Because as on date of this circular, around 75,000 megawatt of thermal power plants and power sector in general were already reeling under stress because of either lack of fuel supply, lack of PPA, regulatory approvals, not getting grant of open access, and all these things were building on to the unviability of power supply. Right. So a lot of opposition came to the circular. This was a petition was filed in Allahabad High Court also for quashing the circular. But Allahabad High Court, Honorable High Court did not intervene. They did not grant any interim relief. Then this was appealed before Honorable Supreme Court. The case name was Dharani Sugars and Union Chemicals versus Union of India. Supreme Court quashed the circular, saying that RBI cannot have an en masse direction to push every defaulter into IBC. It can be a specific company specific default, not an en masse direction. When that got squashed, then RBI came up with a new circular, which was the 7 June 2019 circular. Now, what they did here is they gave banks a lot of discretion. They said either you push the companies, defaulting companies into IBC, or you provide more into the books. So in a way, banks were disincentivized, from provision into books, and they were more incentivized to get the companies into IBC. So a lot of discretion was given, and through this route, a new framework was brought in. So in this context, we did the Sai Wardha resolution. I mean, in all these things, the CRP petition got admitted in 2018 November, and this was the context we were handling the CRP case in. Now we just have created a structure for easy understanding, where Venkatachalam sir is a big admirer of acronyms. So for his wish, so we have created an acronym called insolvency. The slides are made up in that format only, where we start with introduction and end with yield maximization and key learning. So I'll just take you through the introduction of the corporate data. Yeah. So a brief overview of the corporate data. So this is Sai Wardha Power Generation Limited. So this is a 540 megawatt power plant, coal-based thermal power plant. It has 4 units, 135 megawatt each, and it is located in Varora Growth Center, Chandrapur district, Maharashtra. Now, this is very strategically located along the national highways also. And Sai Wardha was considered as one of the pioneers in group captive model of power generation. We'll come on to what the captive basis means about. And the plant, all the units were commissioned, and the operation date was around 2010 to 2011. So within 1 year, all the 4 units were commissioned and operationalized. So the company worked on a group captive model. So what captive generation plant is? So any individual, corporate, society, or association of person, they can come together and they can set up a captive power generation plant, which basically means I'm generating power for my own independent consumption, right? So this makes more economic sense, because a lot of times the generation cost is much lower than the tariff which you are getting from a state industrial supply. So it makes more sense for consumers to go for a captive scheme. Now, captive schemes are like, there are 2 basic conditions in captive scheme. One is at least 51% of the power produced by the captive generation plant should be used by the independent owners, right? And the second condition is you should maintain 26% ownership in the captive generation plant. If these 2 conditions are met, you get a lot of benefits by being a captive generation plant. You don't have to pay additional surcharge. You don't have to pay cross subsidy surcharge, and you can have the tariffs as per PPA. A lot of red tapeisms get cut out because then you are following the PPA. So it brings a lot of certainty on revenue viability. So this Sai Wardha worked on a group captive model. So captive can also be based on ownership. It can be individual captive, or it can be group captive. It can be based on fuels, like whether it's gas based or coal based or renewable based. It can also be based on connectivity to grid. It can be a standoff captive, which is not connected to the grid, or it can be connected to the grid. Now, this captive, so we also had like PPAs tied up with a lot of captive customers. So we had existing arrangements. At least 137 megawatts of PPA was tied up with captive customers. We had fuel supply agreement with Western Coal Limited, which is a subsidiary of Coal India, and we had transmission agreement with MSETCL. So you can transmit the power generated to the grid. Now, certain credit facilities were availed by the corporate debtor, including your term loans. You had term loans, you had external commercial borrowings, you had cash credit, your overdraft facilities, and a lot of bank guarantees were also non-fund based facilities were also available by the corporate debtor. Now, the reason for stress in the corporate debtor is basically because they said the MSCTCL felt that captive compliances are not being met. The rules relating to captive customers are not being met. Hence, the additional surcharge and the cross subsidy surcharge benefit cannot be given to the corporate debtor. Hence, there was an additional levy of these surcharges on the captive customers, which was then again being burned by the corporate debtor. Apart from this, the coals were being supplied at a higher rate. There was delay in grant of short-term open access, and there was a lot of regulatory issues also. Because of all these issues, a lot of stress got built up in the viability of supply of power. Because when you get additional surcharges added and you built up a captive scheme to benefit the consumers, to the owners of the plant, but when you have to add all these charges, it becomes unviable. Because of all this stress, it resulted in default to a debenture holder about 91 odd crores, India Opportunities PT Limited, and because of that default, a section 7 was filed in honorable NCLT and CRP was initiated. Now, when CRP was initiated, Mr. Venkatachalam was appointed as the IRP, and then he did a public announcement, invited for claims. Subsequently, he constituted a committee of creditors, which he will throw light on in the coming slides. After constitutional committee, he was also confirmed as a resolution professional. Can we go to the next slide, please? Thank you. So when an IRP or RP comes in the picture, just a change of guard, meaning the suspended management is kept aside, and a new supervisor who is working under the COC's guidance and under CLT's guidance, he comes into the picture and he runs the show. He overtakes the operations along with the suspended management, along with the promoters. He has to liaise with all the stakeholders, and he has to make sure that there is a revival, which is the object of the code. So the first thing which we do in a CRP is we communicate with all the stakeholders. We first identify all the lists of stakeholders which are there, which are connected to the entity, and it can be shareholders, lenders, head of departments, employees, authorities, all regulatory bodies, income tax authorities, major regulatory bodies, and major vendors like WCL and MSLDC. All these we communicated with, informed them about the CRP's beginning. Then we prepared a model timeline. So regulation 40A is there. So we prepared a similar timeline as to what all has to be achieved in the CRP, what are the compliance activities which have to be done. Then we visited the corporate debtor's office. So it's the key to ensuring cooperation, the key to get the best out of the CRP is to first building relationship. So we went to the corporate debtor's office. We met with the key managerial persons, the directors. We understood the business. Nobody can explain you the business better than the management, which has been running the company for so long. So we understood the business from them. The regulatory environment has to be understood. All the compliances which are required, which have been pending, which have to be done. A good comprehensive holistic picture has to be taken about that. Then we also understood how to run this as a going concern, because the moment in CRP started, MSCTCL, which grants your open access permission, that would do the open access permission, and we had to shut down the plant. So we also understood the requirement, how to operate as a going concern, how much funds will be needed, what is to be done to get the permission again. Then there were like 136 employees in the plant and the corporate office. We met with them. Relationship building again is a very key exercise and resolution professional has to do, which Mr. Venkatachalam, he did it wonderfully. All the workmen employees, we gave confidence to them. We told them about the process, apprised them about the process, so they don't have any apprehension as to their job securities or what will happen in the future. Then, because it's a power plant, you have a lot of subcontractors, right? And these subcontractors are also dependent on the corporate data. So we again built relationship with the labor contractors, the security and non-dem agency. We assured them that we are here to protect their rights as well, and we are going to follow the law, and in accordance with the law, we'll try to do the corporate data. A lot of initial challenges were there. There are, as I said, limited operation of the plant, and then the transmission access got cut off. Very minimal cash flows were there. Regulatory issues because of MSCTCL dispute was there. You had an open access dispute and an NOC termination from MSCTCL. Also, we had some disputes going along with WCL, which created a deadlock in the coal supply. Can we go to the next slide, Rajesh? Yeah. So as I said, when you step on as an RP, like all other cases, first you do the public announcement informing, you invite the claims, right? And then the claims start coming. Now, since this had so many employees and so many operational creditors, a huge quantum of claims came. you had vendors for fly ash, you had vendors for every single thing, and like 136 operational creditors filed their claims, and it took a long time to review all those claims, match them with the books of account. If it's not there, probably because of some reason, then look at the substantiating documents, verify the claim and admit the claim. Then we constituted the committee of creditors, which again Venkatachalam sir will show on the next slide. We undertook control and custody of the assets of the corporate debtor. We created a mechanism for control over payment. So we made sure that no payment happens without the approval of the RP, and everything goes through the banking system. There was a change in bank authorization. RP was made the sole signatory of the banks. And last 2 years, books of account was taken and it was reviewed to understand what kind of transactions happened. Then we also reviewed agreements and contracts of the corporate debtor. So we had a bulk power transmission agreement with MSCTCL, and we had a short-term open access as well. And a lot of other agreements were there, which were reviewed, evaluated, to understand their implication, any consequential fallouts which might come. We licensed with all the operational creditor. We had to be on calls all the time. Everybody will just call the team and they'll ask about what about their dues, how to file a claim form. So you have to be very empathetic towards them. You have to understand their situation also, and you have to maintain good relation with them if you want to run the CRP smoothly. Next slide, please. Yeah. So I hand over the platform to Venki sir, who will take us through the snapshot of claims and the composition of COC.
Thank you, Badri. As you already stated about my penchant for acronyms, I would like to share that he used it for structuring this presentation. I also use it as a mnemonic to understand and appreciate the stages of CIRP. Like I stands for initiation of CIRP, N stands for nature and duties of interim resolution professional, S for secured creditors, O for operational creditors, L for liquidation, V for valuation, E for entrepreneurship, that is new investors coming in, N for nature and duties of resolution professional, C for committee of creditors, and Y for yield or maximization. Anyway, that is only just to show our eagerness to understand the subject from new angles and always be in touch with the subject. Now, as you can see on the slide, the total claims amounted to 6,848.83 crores, out of which 667.69 crores are unsecured financial creditors. This represents the debt arising out of corporate guarantee. Now we have unrelated financial creditors is 4,070.6. Related party financial creditors who will not get anyway the payment out of the resolution plan is 264 crores. Workmen and employees, we had 136 employees, 1.67 crores totaling, which is admitted. Other operational creditors, 325 crores. And the biggest chunk of this is contingent claims, which is 1,519 crores, and which represents actually the claims which were pending adjudication in various forums or belated claims. Next slide, please. Yeah. Now this is the financial creditors, the COC. They comprise of 14, out of which the top 5, if you see, they constitute almost 75% of the total voting share. The total exposure, 75%, is shared by IDBI, is the lead banker, Standard Chartered Bank, Oriental Bank of Commerce, Axis Bank Limited, Indian Overseas Bank. The rest you can see there are total 14 financial creditors who constituted the COC. Then this is the list of, as I told you, we have seen in the previous slide that the contingent claims which arose out of pending adjudication is to the extent of 1,519 crores, 1,519 crores. Out of this, the major contingent claims are from the following parties: Western Coalfields Limited, which already Badri has referred to it, from whom we used to source our coal supply, 753 crores. Graphite India Limited, 148. MSEDCL, 121 crores. Mahindra CIE Automotive Limited, 109 crores, where we had captive arrangement. Lupin Limited, MSCTCL, Viraj Profiles, and Inox Air Products Private Limited. These are some of the major contingent claims which constituted out of the 1,519 crores. Now, Preparation of information memorandum, yes, we do it. Then a total of 10 COC meetings were convened during the period of CRP. Now, professionals, including valuers, transaction auditor to identify avoidance transactions, and legal advisor to the RP was appointed with the approval of COC. In the interest of best corporate governance practice, each resolution process cost was being put up for consideration and approval of the COC. Now, as 180-day CRP period was ending on 8th May 2019, COC had passed resolution instructing resolution professional to file application before Honorable NCLT for extension of 90 days, which is permitted under the code. And it was extended till 6th August 2019. And this application, as you are all aware, it's under section 12, subsection 2 of the IBC. The Form G was published inviting expression of interest. Based on instruction of COC, an amended Form G was also published. Eligibility criteria for prospective resolution applicants was discussed with COC and approved as mandated under section 25(2)(h). COC had passed circular resolution for extension of last date for submission of EOI. A request for resolution plan and evaluation matrix was framed and put up before COC for approval. Evaluation matrix was drawn based on trends existing in the sector. Considerable weightage was given to deferred payment as well, along with upfront payment. This is mainly to encourage wider participation. 5 expression of interest were received. They were evaluated for eligibility as per criteria approved by COC. Section 29A check was initiated. Site visits were conducted for prospective resolution applicants and their due diligence was facilitated. In order to enable running of the power plant, RP, that is, our team has facilitated term sheet for interim finance of about 345 crores for consideration of the COC. However, the same was not approved. Single resolution plan was received. We have received one resolution plan. The same went through multiple rounds of negotiation and was finally put up for approval. Now, the other routine activities which were performed during CRP, that is site visits, I told you, then frequent plant visits and physical verification, budgeting, forecasting, that is cash flow management, review of management information system, weekly sales and expenses, payroll management. We have facilitated statutory audit and other secretarial compliances, including holding of board meetings in the prescribed period, holding of the AGM for adoption of accounts, etc. Representation before regulators, government departments, and also licensing with Western Coalfields, MSCTCL, subcontractors, etc. Now, apart from this, ensuring representation in ongoing litigations of various forums, including but not limited to APTEL, various high courts, Honorable Supreme Court. Now, during CRP, around 8 interlocutory applications were filed against non-consideration of contingent or belated claims. Necessary representation was ensured in these matters, which were ultimately disposed of by Honorable NCLT. Corporate debtor, that is Sai Wardha, was being charged both under BPTA, that is Bulk Power Transmission Agreement, as well as short-term open access. The same was challenged by the company and the said issue was sub judice and pending adjudication before the Honorable Appellate Tribunal for Electricity. On account of this, MSCTCL had issued notice relating to event of default to the company on 13/11/2018. That is, as soon as we have taken over as IRP, within few days we got this event of default notice and discontinued the power scheduling of the power from 15/12/2018. Said actions relating to discontinuation of power was challenged before the NCLT Hyderabad we filed an interlocutory application for that. The said application was allowed and NCLT restored the access and also directed MSC TCL to collect charges for supply of power after the date of NCLT order and file claims for previous arrears as per the norms of IBC. Due to this, CD had to suspend supply of power to captive consumers. So these are all the challenges we faced. Now, this order dated 10th January of NCLT asking them to come for claims and also supply essential inputs. They can't stop the inputs for the company. This has actually paved the way. It is a precursor to section 14(2)(a). Now we all know section 14(2)(a). They at the if the RP feels that there are essential inputs to the company, they cannot be stopped by the provider so long the amounts are paid, charges are paid for the supply of inputs. And this has come into force with effect from 28th December 2019. Yeah. Next slide, please. Yeah, now I request Lokesh Vasudevan to take over, please.
Thank you, Venkatachalam sir. As you've heard the introduction in regard to the level of understanding of the corporate data by the insolvency professional and his support team, this becomes the crux and stands as the value for which the registered valuer's appointment and thereafter the appropriate implementation of the resolution plan. Without the understanding of both the business and its related challenges, it becomes very, very difficult to ascertain an appropriate liquidation value and fair value of the corporate data. More specifically, where the valuation estimates have to give proper regard to a going concern rather than a liquidation value, which is the core of the IBC code. So in line with the regulation 35 of the CARP regulations, the registered valuers were appointed. Multiple quotations were obtained from multiple valuers. It was placed before the COC and an appropriate appointment and engagement letter was entered into. Based on which criticalities in the valuation exercise, we had to facilitate all the details of the assets of the corporate data and ensure that across the length and breadth of the country, even if there are some assets at various remote locations, because power entity has certain assets in the remote plant location and certain assets in the corporate office, we ensured that all of those assets are physically verified. As you are aware, the recent judgment in multiple other cases facilitated the physical verification had not been carried out for certain assets and therefore considered to be disregarded, and certain valuers were also disqualified by the IBBI. And we ensured that all the physical assets were appropriately verified, and the valuation reports were in compliance with the international valuation standards. The valuation methodology used for arriving at liquidation value and fair value were jointly discussed and deliberated, because in respect of fair value, the methodology adopted is based on the inputs provided by the RP team. So unless the inputs provided by the RP team are logical and practical, the fair value assessment could become inappropriate. So we need to ensure that in order to arrive at an appropriate fair value, the inputs are both reliable and practical. We understood the reasonableness of the assumptions that are being carried out for arriving at the liquidation value and fair value, and the report is complete in all regards. The snapshot of valuation is provided here. In the liquidation value, the average of the two valuers was considered at 597 crores, and then the fair value was considered as 1,529 crores. It is also important for the resolution professional to understand the basic benchmarking background for each of the value of assets, especially when it comes to national assets like road projects, power projects, airports, and so on and so forth. It is understood that based on the amount of megawatt capacity or the distance or the tonnage, it is quite easy to determine what the cost of erection, that is a depreciated replacement cost is. So for example, right now people might talk about 10 crore per megawatt as the implementation cost today, given the cost of steel or other components. So those benchmark criteria should be very well aware. As you're aware, this is a 540 megawatt coal thermal power plant. So what could be the approximate production, the cost involved for generating this particular power plant can be used as a benchmark strategy. Moving on to the other aspect related to the PUFE transactions. We use these term PUFE transactions as an acronym for ease of understanding. This emanates from section 43, 45, 50, and 66 of the code, which is very, very crucial to understand whether any transactions have been carried out which are preferential in nature, which are undervalued in nature, which are done with the intention to defraud the creditors, and any transaction which represents extortionate credit transactions. These are 43, 45, 50, and 66 of the code. So we had sought for quotations from agencies which are experts in doing this particular review of the PUFE transactions. We placed it before the COC. Appropriate cost approvals were obtained, and thereafter the engagement letter with the transaction reviewer was entered into. The steps we indicated was to provide appropriate inputs to the agency who's doing the transaction review, because unless otherwise appropriate books have been maintained and unless otherwise the recorded transactions are provided in entirety, this assessment might become futile. So the books of accounts need to be updated. Appropriate transactions should be recorded. All backup documents for all the recorded transactions should be in the custody and control of the resolution professional in order to prove the authenticity of the transaction. So we had scrutinized the books of accounts, identified the related parties, both as per Companies Act and the extended arm for the purpose of IBC, evaluated the authenticity of the underlying documents, the supporting documents. We had evaluated the minutes of the board and the audit committee approvals that were placed earlier, and understood the financial health of the other related entities to check if there are any transactions that were done to enrich other related parties, and identification of red flags in order to form an appropriate opinion. So all this was being discussed, and it was not left to the judgment and wisdom of the agency alone. After appropriate discussions with the agency, the concluding remarks were obtained from the management, and thereafter an appropriate view was taken in joint coordination with the legal team of the resolution professional. Moving on, I think we had to be discussing for the next 10 to 12 minutes on value maximization. Over to my colleague, Ojas Modi.
Right. Thank you, sir. So the most important aspect in our CRP process is the receipt of the resolution plan, which is basically aimed at the revival of the corporate debtor. So the IBC, when it was promulgated, it was promulgated with the aim of revival of the corporate debtor, but not the recovery mechanism for the financial creditors. And often it has been misconstrued by the lenders that it is a means of recovery for their outstanding dues, but it has been adequately did by the judicial forums in Swiss Ribbon's case and many other matters like that. So starting with for validation of resolution plan, we'll start with the EOI process as explained by my colleague earlier. So for receipt of EOI, first and foremost step is to determine the eligibility criteria. So when we are looking for a potential buyer, just to avoid any unwarranted intervention of, say, the parties who come with an intent of disrupting the process. So it's better to keep an eligibility criteria, say financial eligibility and a technical eligibility. So for this present matter, we kept a financial eligibility criteria of net worth of minimum, say 100 crores and minimum asset under management of 200 crores, and plants who are, or the potential resolution applicants who are having a technical experience in the field of power generation of operating or maintaining more than 100 megawatt. So those were the eligibility parameters which we set for the receipt of EOI. So Once the eligibility criteria was determined and approved by the COC, then we went ahead with the publication of expression of interest and Form G. And after that, we scouted for the bidders. We approached multiple, we prepared a pitch document and we went to various players, big players in the power sector. And apart from that, we went to multiple financial investors who are looking for a strategic tie-up and who are actively looking for pursuing these stress assets. So once we issued the Form G, after that, once the 14 days time period is given for receipt of expression of interest. So once the expression of interest are received, so we evaluate the expression of interest based on the eligibility criteria which we have set out in the EOI document. Apart from that, we'll verify all the financial statements and other documents which we ask the potential resolution applicants to submit along with the EOI documents to assess their credibility, whether they have the financial strength to participate in the EOI process, in the resolution process, and whether they have the adequate technical strength to run and operate the corporate debtor pursuant to this revival. So once we receive the, so at that point of time, the concept of provisional list or final list was not there, which came in later as the law evolved. So at that point of time, once the eligibility is confirmed, after that, immediately we issued the RFRP document along with the evaluation matrix. Evaluation matrix is broadly comprising of your RFRP is the request for resolution plan is the base document in which you have to submit your resolution plan, and it covers all the mandatory contents of the plan which are required to be inbuilt as per the IBC. Apart from that, the evaluation matrix helps to assess, helps to analyze that which it's like a financial analysis parameter which is set to evaluate which plan is beneficial for the corporate debtor. So it has quantitative parameters which is based on, say, upfront payment, your deferred payment, NPV of the deferred payment, your equity upside which the PRA is offering. Apart from that, there are a couple of qualitative parameters as well, such as the financial strength of the company, of the PRA, the historical records of their mergers and acquisition in the field of power sector, or experience in the power sector, or their credit worthiness. So like all that aspects, benchmarking is done and scores are awarded, and based on that, evaluation is done. So that is the base document, evaluation matrix and RFRP, which is issued to the potential resolution, eligible resolution applicants. So after that, the NDA is signed, and based on that only data is shared, because all these are confidential data which of the corporator is shared with the potential resolution applicants through an through a virtual data room which is secure, which is having a secured access. So once the data is shared, the resolution applicants, potential resolution applicants often ask for site visit. So they come along with the technical team and to do the site visit of the corporate debtor, and whatever queries are there, be it technical or financial queries or whatever past records they demand. So we have to address all those queries and facilitate all the information so that a proper due diligence can be done. Until and unless a proper due diligence is done, no potential resolution applicant can offer a better value for the corporate debtor. So once the due diligence process is complete, we receive the resolution plan. So what we followed, we wanted to ensure best governance practices and ensure complete transparency in the process. So we made sure that all the resolution plans are handed over in front of the COC only in the physical meeting. So we received all the resolution plan in front of the COC, and pursuant to that, we did a Section 29 eligibility test, because we want, as per Section 29 of the code, only an eligible resolution applicant who is not disqualified under Section 29A can submit a resolution plan. So accordingly, we engaged an expert agency who did a 29 eligibility, and whatever red flags were pointed out, we intimated them to the potential resolution applicants and we sought clarifications from them. And based on that, we found out that there was no Section 29A disqualification was attracted, and accordingly, all the potential resolution applicants were found eligible. On receipt of resolution plan, we break down the various parameters which were mentioned in the resolution plan before the COC for their evaluation and analysis. And we did the scoring based on the evaluation matrix, and pursuant to that, whatever deficiencies were there vis-a-vis the mandatory contents of the resolution plan or other aspects which were required to be inbuilt in the resolution plan were communicated to the potential resolution applicants. And pursuant to that, the deficiencies were cured and revised resolution plans were received from the PRAs, and that were placed before the COC for further evaluation. So in this, during that time, that the rule of dissenting financial creditors also came into the picture. So we had to develop multiple simulations for the committee of creditors that in case a particular financial creditor dissent, then what could be the potential payout, or how can a assenting financial creditors payout will be impacted because of a dissenting financial creditor. So all those multiple simulations have to be placed before the COC for their evaluation. And pursuant after that, we facilitated multiple negotiations with the COC and the PRA, between the COC and the PRA, and we were able to help the COC to attain the best possible resolution plan in this particular matter. So we'll just move on to the key terms of this resolution plan. So the total resolution plan amount offered was around 1,055 crores, in which the employees' debt was paid in full, the CRP cost was paid in full as per the mandatory contents of the code, and the financial creditors' debt was restructured into a sustainable debt, which was supposed to be paid over a period of time, because since this is a power sector and the realizations, as my learned colleague also updated you earlier, is very contingent and depends upon it's totally in the hands of the DISCOM. As soon as DISCOM releases the money, then only the corporator can realize the dues. So accordingly, the deficit debt was restricted into a sustainable debt. And apart from that, the potential resolution applicant proposed a substantial amount of almost 400 crores towards the capex and working capital requirement, which shows the intent that the potential resolution applicant was very much interested in the revival of the corporate debtor. Apart from that, a very interesting clause which came into the picture was that since there were contingent claims close to 1,500 odd crores, so the potential resolution applicant proposed that he earmarked a particular amount and stated that in case these all contingent matters are resolved within a period of 2 years, that TNMAT amount can be distributed among those contingent claimants. Otherwise, that particular amount can be distributed to the operational creditors whose claims have been already admitted. So after that, the resolution plan was finally approved by the Committee of Creditors on 2nd of August 2019. And as the period time available with us for completion of CRP was till 6th of August, so we were left with very short span of time. But we were able to file the final application for approval of resolution plan by 6th of August 2019. And consequently, there were little bit of litigations involved, but however, the plan was ultimately approved by the Honorable NCLT on 17th October 2019, along with certain reliefs as well, which was sought by the potential resolution applicant. So it was one of a kind of its order in the IBC phase, where the certain reliefs were granted by the adjudicating authority. So as soon as the resolution plan was approved, so one of the term in the resolution plan was regarding the appointment of the steering committee, who will act as a monitoring agent for supervision on implementation of resolution plan. So as soon as steering committee was formed, so total 6 steering committee meetings were convened during that period of 1.5 months, in which the resolution as soon as resolution plan was approved, the RP was supposed to freeze the CRP cost and convene constitute the steering committee and identify all the amounts which are payable to the stakeholders. So when the first committee meeting was called upon, so the important the steering committee comprised of the lead members of the lead banks and from the team of the successful resolution applicant. So, sorry. 1 second.
Yeah, Ojas, I can take this forward with your permission.
Yes, sorry, not feeling well.
No problem, Ojas. So in
Please
regard
go
to
ahead.
the
Ojas, it's fine. Lokesh, please carry on.
yeah, thank you, sir. So in regard to the implementation, apart from the Honorable NCLT's approval of the resolution plan, which is typically binding on all the creditors and stakeholders, the effective implementation of the plan is the actual key and actual success for the entire IBC process. Given such a very complex scenario involving multiple litigations from suppliers, from vendors, from bankers, from government and regulatory authorities, with employee issues carrying on, with a widespread asset base spread across multiple areas and plant being in such a remote location, it was important to handhold as an implementing agency, it was important to handhold this smooth implementation to the new bidder whose resolution plan had been approved. So as a joint requirement, the new bidder whose plan was approved was insisting on the monitoring agency being set up. Consequently, certain key stakeholders, which are financial creditors, comprising of the lead bankers, were made as a steering committee. And the steering committee had appointed us as the monitoring agency, as an interlink between the new management who are supposed to take over and thereafter settle the due process as per the approved NCLT norms, and thereafter ensure that if any fresh agreements in terms of the term loans have to be entered upon. Having understood this particular company for over the CARP period, it was important that we had to freeze the CARP cost, constitute the steering committee, and convene the multiple steering committees with the lead bankers in place, appropriately identify all the stakeholders to whom the amounts were to be paid, distribute the proceeds as per the resolution plan, and in respect of those which are contingent payments or the payments to restructured term loans, we had to involve lawyers, both from the resolution applicant, that is a new owner's side, the lender's side comprising of 14 bankers, and our own monitoring agency's legal team, in order to get a renewed restructured loan document. So we ensured that all these 14 bankers had provided their comments. We take those comments, set up a proper restructured loan agreement, take it to the new bidder, and ensure that all these are done smoothly and seamlessly. And then typically on all those assets which had to be free from charge, we need to ensure that the NOC were received from all the existing lenders. This was probably a little challenging task because it comprises of 14 different lenders with multiple views emerging from each of these bankers on account of their receipt of board resolution and approvals. So we ensured that this was also concluded, and it was very important to, as a going concern, to ensure the secretarial filings, because this becomes very crucial for in respect of extinguishment of existing shareholding, transferring the shareholding to the new promoter, ensuring that all the ROC compliance are concluded, nominee directors, if any, is appropriately inducted, and finally handing over the possession of the corporate data. So this had taken us some period of time, but it was done with seamless implementation. Yeah, moving on to the certain nuance aspects of the implementation and the litigation issues, I request the IP Venkatachalam sir to carry.
Thank you, Lokesh. Yeah, the proof of the pudding is in the eating, and the proof of any successful resolution plan is in its implementation. And Lokesh has nicely taken through the process with which the steering committee was formed and how it was implemented successfully. But in this process, there are certain implementation litigation where certain judgments were worth noting, like SEZ appeal. Sai Wardha was operating in SEZ zone, special economic zone, and was required to maintain positive net foreign exchange as per SEZ rules 2006 for period of operation. See, SEZ failing, which penal action could be taken. The resolution plan has capped the amount to be paid for denotification from SEZ, as my earlier colleague in his address has stated. Specified officer of SEZ had filed appeal before Honorable NCLAT regarding the provision in the resolution plan, like capping the amount to be paid for denotification. NCLAT has dismissed the appeal. Subsequently, Special Economic Zone through specified officer has appealed in Honorable Supreme Court, and the appeal was dismissed there as well. And consequently, Sai Wardha, the corporate debtor, was denotified from SCC. Secondly, the Western Coalfields Limited had appealed aggrieved by non-consideration of its claim. The said appeal is pending for adjudication. Now, 17 operational creditors, mainly subcontractors, had appealed against the approval order, contending that their workers should be considered as workmen of the corporate debtor and be paid in full under the resolution plan. The said appeals were dismissed eventually by Honorable NCLAT, followed by Honorable Supreme Court. Then there is one more litigation. MEC TCL, Transmission Corporation Limited, Maharashtra. Appeal was filed with respect to termination of bulk power transmission agreement under provision of resolution plan without any liability on the resolution applicant. The said appeal was dismissed as well. The same was appealed in Apex Court, and there also it was dismissed. These are some of the historic judgments which went in favor of the resolution applicant, and they made the implementation process smoother. Then there is one more by the State Load Dispatch Center, MSLDC. Appeal was filed against the provision in the resolution plan, which was referred to by my earlier speakers, OJS, regarding settlement of contingent claims adjudicated within 2 years, failing which the earmarked amount will be distributed to admitted operational creditors. So this was challenged, appealed against, and the said appeal was dismissed. Okay, now we'll have a cursory resolution plan timeline. Can you show it, OJS? Yeah. 9th November 2018, that was the date when it was admitted, IRP was appointed, and the moratorium was declared. 12th November 2018, Form A was filed by the IRP. 30th November 2018, COC was constituted as per the code. 6th December, appointment of 2 valuers, which Mr. Lokesh was referring to under section 27 and 35. Then 2nd January, information memorandum was prepared. 6th March 2019, RFRP, once again. 10th January 2019, appointment of transaction reviewer with the approval of the COC was done. 17th January 2019, EOI was published. 4th February 2009, circular resolution was passed for the extension of for submission of expression of interest. 9th February 2019, amended EOI was published. 6th March 2019, resolution for request for resolution plan and evaluation matrix. Then 15th April 2019, CRP extension under section 12(2) was made, an application was made, and extension of 90 days also was obtained. June 2019, section 29A analysis was completed, and we found the resolution applicant is not disqualified for being a successful resolution applicant. July 2019, resolution plan and revisions. As per the queries of the COC, the resolution applicant was asked to revise the resolution plan and satisfy that, as our earlier speaker said, there was much communication between the two, and finally COC was satisfied. 2nd August 2019, approval of the plan by COC was done. And finally, the adjudicating authority approved the resolution plan on 17th October 2019. Then we come to the cursory implementation timeline. We have appointment of implementing agency, as Mr. Lokesh said, convening steering committee, then payout was done as per the resolution plan to all the stakeholders. Then execution of restructured loan and handover of the possession and documents to the resolution applicant. And this way the process has been effectively and efficiently completed. Yeah, now for the yield maximization, over to Lokesh.
Thank you, sir. Moving on to the specifics on the implementation and execution challenges, which the IBC always incur, is the value maximization. Typically on the coal-based thermal plants, Badri had given a very, very effective introduction on how much stress was being incurred within this particular sector. More importantly, coal, where there are problems from the coal vendor side, there are problems from the power purchaser side, problems from the distributors front, a problem from the state electricity boards, problems from the employees and the related employee unions. So when the system is completely reeling with problem, it was important to identify those potential aspects and ensure a seamless resolution. So yield maximization, it was reeling under stress in respect of coal-based thermal power plant, but we ensured that the core of this resolution is important to revive the power plant rather than get into a liquidation scenario. So confidence building measure was always important. So core of resolution was revival through value maximization and not just based on a recovery proceeding. The commercial wisdom of COC is supreme. There is no doubt about it. Multiple cases, including the Indian Overseas Bank versus Shashidhar and the United Seamless judgment, which upheld multiple times that the commercial wisdom of COC is always supreme and sacrosanct. Nevertheless, it becomes the duty of the resolution professional to provide adequate inputs in regard to the appropriateness of the resolution plan, the appropriateness and the value that the resolution applicant is bringing into the system by giving various simulation techniques in the RFRP. While the RFRP is approved by the Committee of Creditors, once a resolution plan comes, they come with their own set of thought processes on what amounts they want to bring in. So unless otherwise that is effectively communicated through simulation techniques, by running multiple simulation techniques on the resolution plan, and effective yield maximization cannot be ensured. Most important other aspect is the litigations during the CIRP. As Mr. Venkatachalam pointed out in the earlier slides, after the implementation also, multiple agencies, in fact, very, very large government agencies like Maharashtra State Discom, the Western Coalfields, multiple operational creditors, all of them had gone up to the apex court to ensure that there is some value recovery for their side or to uphold their side of the claim forms. Unless all these are continued till the end and appropriately concluded with the strength of the resolution professional and its legal team, a proper closure to the resolution plan cannot be achieved. Then limited judicial review, that is during the initial phases, having gone through about 6 to 7 years in the IBC process, a reasonable amount of wisdom is available within the IBC practitioners and their support team on what could be a reasonable commercial wisdom or exercise of professional judgment. But in 2018, when it was reeling with a lot of issues surrounding the applicability of certain sections, the appropriateness of sections, and how to interpret those sections, we need to take an appropriate judicial view. Then the role of the lead lender in the COC becomes very, very crucial. As seen from the 14 financial creditor list comprising over 6,000 crores, the highest being IDBI was around 35-38%. So unless the lead banker to whom the largest haircut is going to be hit takes the entire charge of this particular resolution process, works closely with the resolution professional and the potential resolution applicant, this speedy resolution would be very, very difficult. So here in this case, we thank IDBI, who was the lead lender, who took a very catalytic approach in ensuring a very speedy resolution. Moving on to certain key learnings. Specific to this particular resolution, as we discussed multiple challenges that we had encountered, the same challenges might have been encountered by other resolution professionals also, but nevertheless, specific to coal thermal resolution, the key learnings from this particular resolution plan or this particular CIRP process was the understanding of the regulatory environment in which the sector was operating under. Evaluating key business arrangements, how implications of PPA might change once CIRP is invoked, how certain FSAs might change, how certain BPT agreements are being re-looked at by government agencies. This is very, very important because on the right side, we have the financial creditors who are typically nationalized banks, which is also government. On the other side, we have people like Western Coalfields, state discoms, which are also government agencies who are also acting against the corporate debtors' interest specific for the CARP process. Though they are all acting towards the national interest to recover more money individually for each one of them. From the corporate data scenario, it becomes very, very important to have an unbiased view on any of these government agencies. The IBC code is the only authoritative document on which the resolution professional need to be guided by. It should not have any different approach. In case of any challenges, it is always better to approach the Honorable NCLT. So the importance of evaluating these key business arrangements, we took it as a key learning exercise. Then feasible solution for practical challenges. We had understood that SEZ, there are issues, land related, there were issues, supply related, there were issues, but finding a feasible solution for these practical challenges, having encountered so much of stress during the one and a half year period, today we are made to understand that the corporate debtor is running very efficiently. Almost 3.5 units are running. Close to 500 megawatts are under operation. All the employees have continued their livelihood because of a successful implementation of a resolution plan, and the bankers, through a restructured loan agreement, are being paid in continuously over the resolution phase. So finding a feasible solution for the practical challenges was again a key learning. Rapport building with stakeholders is again very, very important. This you might encounter, all multiple IBC professionals might encounter when close to 1,000 acres of land are being held under captivity for a power plant or a road project. It is unlikely that a single resolution professional will be able to take control and custody. The control and custody is more of a legal custody rather than actual custody. So in order to take control and custody as required under the IBC, you need to have appropriate rapport with employees, subcontractors, security agencies, regulators, local bodies who will help us during the processes, like the local police station and the related other regulatory bodies. It is important to build rapport with all of them. Without any rapport, trying to implement the IBC will lead to ineffective control and custody, and therefore ineffective implementation of a resolution plan. Next is the review of limited judicial precedents in the sector. Some of the most important judicial precedents that have come out in respect of Section 14(2)(a), and thereafter with regard to MSETCL, and then the SEZ denotification, were all precedents to subsequent IBC professionals implementing this decision very, very smoothly. Importance of documentation. Yeah, this is very, very critical, because as a going concern, chartered accountants specifically have significant knowledge on the accounting and legal and secretarial aspects. So an appropriate guidance from the insolvency professional, was a very seasoned member with over 3 decades of experience, had come in with a lot of inputs from the secretarial front to ensure a going concern. Our team put in a lot of effort to continue to account. Every quarterly, the books of accounts were closed appropriately and placed before the internal committees to ensure that it is done. Audit was done continuously without any restriction of access to the auditor. Complete documentation was provided to the auditor, though they might have issued various type of opinion, including the going concern para. But it was our duty to ensure the compliances, including closure of audits, closure of GST-related documents, closure of the annual filings, and ensure that all the returns are being filed appropriately, including income tax returns, so that when the implementation happens and the resolution professional takes over the document, there should not be any further complaints, or they shouldn't file a separate relief application owing to non-compliance from the IRP side. And moving on to the importance of support team. This is very, very critical. Though there are multiple cost constraints that are being spoken of by financial creditors, it is to be understood that unless the team is supported by an effective team with adequate knowledge, the resolution may not become a success. Similar to how a board or a promoter is being supported by a plethora of employees with multiple knowledge, be it direct taxation, indirect taxation, banking team, treasury team, financing team, accounting team. At least here, though so much of cash availability may not be there to impart so much, the effective support team's knowledge base is very, very critical for the IBC process, and no cost-effective solution can be arrived at by giving compromise to knowledge. Moving on to certain developments from the power sector side, subsequent to what had happened in the resolution plans that are some of them were rendered ineffective because of operational issues, and the sector is becoming more and more stressed. The central government had brought up multiple schemes where the payment security mechanism was established so that all the power generators were paid on time, so that there is an ease in the process. And in June 2021, the cabinet approved certain reforms which are result linked and revamping the distribution sector mechanism of close to INR 3 lakh crores. This was during the COVID phase, post-COVID phase, where it was very, very important to ensure undisrupted power supply. And November 2022, the electricity rules 2022 also facilitated that proper EMI-based power facilities being provided to the utilities as well. And the Prapti scheme, which Badri had talked about in his introduction, in order to ensure the effective outstanding measure of each of DISCOMs were being put up since April 2023, so that it is transparently available as to how much the DISCOMs owe to the power generators. And liquidation of dues have improved, but challenges still remain in the sector. As partners to the national building, chartered accountants along with IRPs or chartered accountants acting as IRPs are ensuring that effective implementation is building value maximization to the banking sector, to the stakeholders at large, and at the same time to the country as well. I request Venki sir to add any comments if required, along with Badri and my team members. Venkatachalam sir, over to you.
Thanks, Lokesh. Yeah, I fully agree and endorse what you said, that unless there is a teamwork, a dedicated, committed, serious teamwork, and having a rapport with all stakeholders and convincing each and every person that whatever is happening is for the resolution of the corporate debtor, the success is not so easy. Teamwork is the quintessential feature for any successful resolution. As we discussed, power sector is highly regulated and it is complex. So many suppliers are there. So many litigations can be there. Okay. So understanding of the business model and the regulatory environment is the first and foremost thing. Then judicial precedents, amendments, and guidelines will provide clarity. Still, it's going on. It's a continuous process. Still, much more clarity is required. Now, revival of the power plant during and post CRP is important. Now, as a going concern, we have to have some power purchase agreements and to see that something is being produced and some earning model is developed while during the CRP, and sufficient agreements with the stakeholders are entered into, so that post CRP also there won't be any hurdles for power generation. Now, the object of the code we know is value maximization, and that is what people work for. And role of chartered accountants, I want to emphasize here, as you must have all heard Lokesh, Badri, and Ojas speaking so vociferously and so committedly. When they are presenting a site, they have actually worked on it and then stated whatever they meant. So what they stated, they have done, and whatever they have done has resulted in success. I think that is the role of a chartered accountant in the background, and in the foreground, the legal advisors to represent the resolution professional before various forums and provide clarity to all legal issues. That's very important. I think with this, we conclude, and now it's open for Q&A.
Thanks, sir. It was beautiful and sharing your practical experience. I got some question. One is kindly mention source of entering finance and interest rate with challenges in arranging finance.
Thank you, moderator. I'll take that question on
Yeah,
behalf
please.
of the insolvency resolution professional. So specific to the power sector, the interim finance was very, very challenging. We had to ensure going concern because value maximization could come only if the power plant had operated. We have managed to get some goodwill from the Maharashtra State Discom, who assured us that if you're able to supply power during CARP, we'll ensure that the payment comes on time. And the moment we are able to establish that certain units of the power plant, close to 2 units, so about 260 megawatt, we were able to operate at peak demand. We wanted to show that there is some cash inflow. Had we shown this cash inflow, the valuation and the value that is being provided by the potential resolution applicant could have gone much, much higher. Despite knowing these challenges, we knocked multiple doors to source interim finance. And this was very, very nascent stage where the banking system, including multiple multinational banks, were not even aware that interim finance providers rank superiority on payment of CRP cost. So they were not even aware of the fact that they were able to be settled much in advance when the settlement of a resolution plan happened. And even during a liquidation phase, if at all the company gets into a liquidation, still they have super priority over the secured lenders also. So we had to do one round of convincing. And unfortunately, since there are 14 banks who are already involved in this process, we couldn't knock the doors of nationalized banks in India because some way or the other, they were interconnected. So we reached out to stress funds based out of Singapore and Hong Kong, who were little open to looking at markets in India. The IBBI was in constant touch in order to resolve stressed assets through effective stress mechanism. So we talked to multiple stress funds based out of Singapore and Hong Kong, and we were able to generate 2 term sheets from 2 funds who provided a very, very effective interest rate. Unfortunately, out of confidentiality, I may not be able to mention the banks because the process approval did not come through. But we got a very, very effective interest yield and 2 term sheets. In order to establish transparency, we placed those term sheets in the COC meeting and requested the COC members to vote on it. If they were entitled to revive the unit, run the power plant, take this interim funding, it is their duty to approve this interim finance. If not, and leave the power plant as it is and conclude the resolution plan, the wisdom was theirs. But in the interest of the going concern, the resolution professional had placed 2 term sheets from stress funds based out of Singapore and Hong Kong in the COC meeting. Unfortunately, it didn't go through. The COC did not approve this particular plan.
Thanks,
So
sir.
to just limit the answer in 2 sentences, the challenge was that the Indian banks were not so mature. I think I can still make the comment even today that we are facing challenges in raising significantly higher interim finance. There are very, very few. And because of the timeline of implementation, several of the agencies are unable to provide a fixed interim finance plan. These are the challenges, moderator. Thank you.
Thank you, sir. One question is, what were important criteria for revaluation plan evaluation? Resolution plan evaluation.
Yeah. So apart from those that are mentioned in the IBC code pertaining to 29A eligibility, the RFRP document is a very, very crucial document. The request for resolution plan, we ensured that the eligibility criteria was very, very firm, where a person or an entity who had prior expertise in running a power plant, we ensured that a minimum 100 megawatt operational capacity they should have had, so that only bidders, those who are bona fide bidders, will approach, rather than trying to search across the country or internationally who do not have prior expertise. So we ensured that a specified 100 megawatt capacity had to be ensured, and a minimum net worth criteria had to be established. either through itself or its group entity. We define something called a consolidated net worth, giving reference to the definition of net worth provided in the Companies Act 2013. So those two were the crucial eligibility criteria. We also provided certain eligibility criteria to funds who had a larger assets under management. We ensured that they could also participate as a strategic investor in this process. So these were the eligibility criteria. When it came to evaluation of the resolution plan, we had provided a matrix on what kind of scorecard to be given to certain people. So obviously the lenders will expect a higher upfront settlement. So a larger weightage was provided to a higher upfront settlement. Thereafter, a deferred settlement, a certain weightage was provided. And finally, some bit of equity commitment, conversion of debt into equity also, we had provided some weightage. But generally, COCs right now, they adopt what is provided by the Indian Banking Association, where a large RFRP criteria is already provided to them. And certain industry-based tweaks can always be made. Here, since it's a power sector and the money that is going to come in once the power plant starts, there is some bit of assurance from the government. Deferred settlement was also provided a reasonable weightage. So to answer your question, the net worth criteria, the bona fideness of the bidder in respect of running a power plant earlier, and thereafter weightage given for upfront equity, deferred settlement, and equity contribution. Thank you, moderator. Sir, we are unable to hear you, sir. I'm sorry.
Sorry, sir. There are 3 questions, so I'm merging them. One of the big challenge in CIRP is managing the affairs of the company. The challenge is even more if company is large. Since in your case, being a power company, what are the way or method in managing such affairs of the company as RP? Sir, in similar way, there is 2 questions I'm merging. Being a new person at the helm of the affairs of the company, how you convince such a big workforce, and any major issue you face during CRP? I think it's a major issue you already mentioned. So
Yeah.
this, yes, sir.
We'll probably start with the confidence building measure of stakeholders.
Yes,
The
sir.
first thing that the resolution professional did, here the corporate debtors office was in Hyderabad, the corporate office was in Hyderabad, books of accounts were maintained here, the NCLT was in Hyderabad, whereas the power plant was situated in the Wardha district, that is in the Maharashtra. So the very first step that we had undertaken is, along with certain key employees of the corporate debtor, who are senior management people, not the promoters, the senior management people comprising of the head of procurement, the head of coal, the head of electricity distribution. We went to the plant and spoke very, very transparently to the employees there. Fortunately, there were no employee unions there, but nevertheless, we ensured that we brought everybody together and addressed them with full confidence on what the IBC is. Obviously, it is still, even in today's context, NCLT, liquidation, insolvency is looked at as a very adverse mechanism where the confidence of the stakeholders is very, very low. More particularly employees, they feel threatened that their livelihood is immediately at risk. So in order to establish that confidence, we gave them a very fixed timeline, stating that today we have come within a span of next 15 to 20 days, we'll ensure that we raise an appropriate interim finance or manage the existing cash flow position, and your salaries are paid appropriately. Because in any case, CRP dues have super priority. And anyway, they need to get paid. So unless otherwise, employee gets paid in full, irrespective of whether the plant is operating or not, building a confidence becomes very, very difficult. It's unlikely that any person will stay in a plant and stay in a company for more than 1 to 2 months, because they're all blue-collar workers and their livelihood depends on their monthly salary. So we ensured that confidence is instilled in them by assuring payment of their salaries within a record time. The moment that first salary came in, and we put immense pressure on the COC that livelihood protection of the employees is utmost importance to revival of this plant and the corporate debtor. That convincing mechanism helped us to ensure that the corporate debtor's control and custody was preserved. The moment salary was paid, everybody started listening to us. We formed certain crucial members committee there, ensured that they report to us on a timely basis. We put MIS structures in place, asked them to report to us on a weekly basis. Certain daily reports had come to us. Certain mechanical related daily reports had to come to us. So we ensured that entire process was kept intact by building confidence by payment of salaries. That is the most important and crucial aspect.
Thank you, sir. One more question. What strategies need to be undertaken by resolution professional to maintain the going on status?
Yeah. Irrespective of whether the plant is operational or not, we should ensure that all statutory commitments are being met. Because in this case, unfortunately, the plant could not operate because the COC did not approve the interim finance. But we ensured that even the smallest of GST compliances are being done. The returns are being done on a timely basis. All the statutory forms are being filed. ROC compliance is done. Calling of general meetings are done. Audit of accounts are being done. Income tax returns are being filed. So this regulatory related aspects, if they are taken care of, it safely ensures the going concern status. Unfortunately, if the operations are not approved by the COC, it is not within the resolution professionals' hands. But we ensured that the regulatory compliances are being met without fail. There is absolutely no compromise on paying of any regulatory due, including PF and GST and the other tax-related forms.
Sir, 3 questions are emerging. How to deal with non-cooperation from erstwhile management? Number 2 is how to take care of various compliance during the process. And 3 is how to deal with creditors who could not submit their claim within time.
Okay, so I'll take the last question first with regard to creditors' claims.
Creditors, okay, yeah.
As settled in multiple judicial forums, the claim admittance can happen up till the last date of receipt of resolution plan. Though multiple forums insist on receipt within a specified date, owing to certain issues and their internal issues, they might not have submitted it much earlier. They go to the judicial forum. Judicial forums are okay to admit or request the RP to admit. So we ensured that up till the last minute, we are abreast of how much liability is to be paid. And at any point in time when a claim form comes, periodically we kept updating the claim forms. But the finality is in respect of when the resolution plan is provided. So we can't admit anything post that because there's no consequence for payment. But up till that time, we ensured admittance of the claim forms by having full control of how much ought to be paid from the books of accounts. That is the first question.
Yes, sir.
The next question is, being a new person at the helm of affairs, how do we convince a big workforce? We just answered that question in respect of ensuring their payment of salaries for the first month on time.
And how to take care of various compliance during the process.
Yeah, compliance is because, the support team is very, very crucial. We are all chartered accountants who supported the RP in this process.
Definitely.
So we are all seasoned people who have been in the industry for more than 15 years now. So we ensured that all the compliance are being done by our team ourselves. All of us ensured that each of the forms are being filed through allocation of work internally, jointly working with the employee workforce. We didn't disconnect the employee workforce. Just like how if we were employees, so Mr. Badri and Mr. Rojas will sit down with the accounts department person and file the respective forms. I had to sit down with the respective tax department person to file the income tax forms. When the auditor of the company comes for audit, we ensure that 24/7 we are available with the auditor, just like how a normal employee will react. So these kind of attributes, as if we are only running the entire show because we take control and custody and the company is in our possession. It is important that we act as employees of the company. And thanks to our CA expertise, we were able to ensure all these compliances on a timely basis. Yes, there could be some small aspects. For example, in respect of SEZ denotification and SEZ rules and meeting the directorate, we did not have adequate expertise to do certain aspects. So we had sought help of external legal counsel who facilitated such meetings in order to provide our submissions. So some cases where we may not have had expertise, we definitely sought external help.
Have you faced any non-cooperation from erstwhile management also?
No. Thankfully, in this case, since anyway this is a national asset, and it is unlikely that it is subject to any problems from the promoters, and all the documents are public. PPA, FSA, and all can always be pulled out by discussing with the regulators themselves. But here, thankfully, the promoters were very, very comfortable in discussing with us, and in respect of handover to the effective implementation, we face no disturbances from the existing promoter management.
I see it was smoothly managed. So how was time constant managed? This is a question. How was time constant managed?
Yeah, it's a large amount of difficulties practically we face, which I think we can openly discuss here, is the amount of time taken by the approval authorities. Now, the time limit provided in the code is it's all in a specific timeline, so we can ensure that all that is being done. But approval timelines from COC, conducting COC within the timelines, taking the respective approvals, minute circulation after the COC, this becomes very critical. Practically, if we see a significant amount of time is lost in this particular situation. But thanks to COVID, though it was an unfortunate event, now most of the bankers are completely comfortable with having VC meetings. So that saved a lot of time. To give you a practical example, when the restructured loan document was signed, 14 bankers had to come all the way from their respective jurisdictions to the corporate office. The new buyer also had come along with this authorization. The lawyers from all these bankers, the lawyers from our side, lawyers from the new bidder was also there. So this particular process itself took 1.5 months. But now with a lot of technology in place and VC meetings becoming a norm now, multiple of this time is being saved now.
Great, sir. Sir, one more question. Is it mandatory to distribute leftover contingent creditors balance after 2 years to of original creditors? Yes. In what proportion?
Yeah, so the resolution plan has already built a capped kind of situation where an escrow mechanism had to be built in to settle these contingent claims. It is being effectively utilized even today because in some form or the other, the lead banker will continue as a banker. So we ensured that the resolution plan had a capped facility, and the amount is being mentioned in the resolution plan in a very crystal clear manner, and an escrow mechanism is being put in place. So as far as that escrow mechanism is available and that is being automatically paid at duration of an event, it is considered to be an effective implementation of the honorable NCLT's order.
Yes, sir. Can you please clarify on liability of successful bidder regarding transactions during pre-CIRP and CIRP period?
Yeah. Pre-CIRP period, in any case, it is based on the claim forms only. There is absolutely no liability. This is multiple times reiterated in judicial judgments, including statutory places where statutory authorities like income tax and GST continue to show the liability in their respective portals. They don't adjust demands. Subsequent orders are being provided after the implementation of the plan. So the honorable courts have consistently insisted on this particular non-disturbance to the new resolution applicant and the resolution professional also. So pre-CIRP, the new bidder need not take care of any of these issues. If there are issues, he's free to approach the honorable NCLT, because the approval order is binding on all stakeholders. Nobody can take any advantage out of it. CIRP cost, yes. What has been met through interim financing, through internal lenders or external lenders, will be discussed and deliberated and disclosed to the new bidder. The new bidder ensures that the CIRP cost is built in the plan. So if he is not going to provide separate amounts, he will say that if I'm going to provide 100, you ensure that out of 100, first the CIRP cost is paid and the balance is paid in this proportion.
Sir, based on your experience, whether such decision taken would have an effect of other sector also? Your views on this?
Sorry, could you repeat this question, please?
Whether such decisions taken would have an effect on other sectors also? Your
Absolutely,
view?
sir. Absolutely. In all these government agencies related, these are all settled positions. When state discoms terminate the power, when the state grid agency terminates and all these, right? We approached the courts and we got a stay. We ensured that undisrupted access is provided to ensure going concern. And that became a benchmark going forward. Now, no public authority disconnects power, no public authority cuts down distribution mechanism, no public authority stops supplying coal. All these are ensured by passing this particular resolution. It's a settled case. It is helping the other judgments as well.
That's great, sir. And now, sir, last question. What is the upper limit prescribed for all decisions to be taken under IBC laws? Please clarify, elaborate.
So I didn't understand the question, sir. Upper limit in the sense?
Sir, upper limit prescribed for all decisions to be taken under IBC law. I don't know. This is the question. Since it is 1 crore, I understand. So upper limit, I don't know.
Maybe they're talking about the COC related
Voting share, maybe.
voting share. So depending on the matter that is put under voting, certain are 51%, certain are 66%. So that is the appropriate upper limit that is being prescribed under the IBC. And now, since everything is e-voting based, most of the upper limit is specified in the e-voting itself. So all of the voting members are aware of the voting percentages.
Thank you, sir. I learned especially a lot. Lokesh sir and entire team. Now, may I request Rita ma'am for formal vote of thanks and concluding?
Yes. Ojas ji, maybe the sharing of screen, maybe you can put it off so that we can have the larger screen. Thank you, Venkatachalam sir, and your team members, CA Lokesh Vasudevan ji, CA Ojas Modi ji, and CA Badrinarayanan ji for presenting us with this very important case study on Sai Wardha power generation. And you and your team members, you had taken us through the entire process of CIRP, right from appointment to claim to information memorandum to EOI, resolution plan, evaluation, and taking us to the key learnings and the challenges which you faced. It is definitely going to give all of us, a good learning exercise. And for those RPs, who are in the midst of conducting process, these points is definitely going to help all of us. And thank you, sir, for sharing your experience while conducting the process. And thanks to Amit Tiwari ji for moderating the session and taking the questions of the participants and putting before the speakers and making the session interactive. Thanks to you also, sir. Thanks indeed once again to Venkatachalam sir, Lokesh sir.
Thank you, ma'am.
Ojas sir, Badri sir, and Amit Tiwari ji on behalf of the committee. We are thankful to all of you. And I must also thank all the participants who have joined today and viewed this very important webinar on Sai Wardha. Thanks to all of you, sir.
Thank you.
Thank you.